With next year's outlook, I'd like to bring in Senior U.S. Economist for BNP Paribas, Laura Rosner. Laura, good to see you.
Thank you.
You have Keith here who's predicting a recession. What say you?
Wow. We don't...
Oh, wow.
Oh,
Happy New Year. That's how we started off.
He's been predicting it for a while.
Okay.
So.
Now, have you, when did you call recession next year? When did you make that
At least
call?
a quarter,
Just
right?
starting to now, rolling through it. It's a cycle.
So look, we're not looking for a particularly sunny outlook in 2016, but we think it's going to be good enough for the Fed to at least continue gradually raising interest rates. So we're talking about moderate growth, a little bit more moderate consumption growth, but still an expansion.
Where is that growth going to come from?
The consumer. So we're still seeing a very tight, healthy labor market. It's not necessarily as healthy as we've seen in past expansions, but it's decent, and we've come a long way. People are seeing quite robust income gains.
Yeah, and let's look at actually the last 3 jobs numbers. If you average them out, it's averaging about 210,000 jobs added every single month, and we're seeing a lot of the jobs coming in the construction sector as well as in healthcare. I mean, everybody's been worried, and we're going to talk about it later, oil, but losing those jobs are going into the construction space, which is good for the consumer.
Hey, but Keith, what about the fact that the Federal Reserve has started raising interest rates? Is that enough to even just cause a recession? That's one of the reasons that you're negative.
Yeah, and it clearly is. I mean, from a profit perspective, we are in a recession. From an industrial perspective, we are in a recession. So it's not that hard, actually, to call a recession in components of the U.S. economy. But again, if you break it down and you kind of go down the sine curve, again, it's rate of change. So the economy goes from great to good, and after that, it goes to bad. And that's really the question. And I think you're acknowledging the same. I mean, when you're saying that we're just going to have a little bit of a slowdown, I could say that slowdown could happen. It could happen fast. It can happen slow. Generally, what happens is that these moves are what we call nonlinear, and they tend to surprise people. In recessions, we haven't had one in a long time.
We expect a challenging year for corporate profits as well, but really not so much because the Fed is raising interest rates, but more because we have external challenges. Global growth is slow, and the dollar is strong. The labor market
will get stronger, though, because of what the Fed's doing.
Yes.
So the Fed is part and parcel to what's happening.
A little bit, but I think it's more the growth outlook, right? I mean, 100 basis points of interest rate hikes should not change the world here.
Matt?
But you feel good about wages and where they're heading at this point?
I think
the Fed is really banking on that to justify their continued raise. The signs we're seeing, they're real, but a little tentative at this point, right?
Sure. So on a real basis, wage growth was actually 2.5%. And if you look at past expansions on a real basis, we actually haven't seen wage growth exceed 2.5% many times. Now, a lot of that has come from the falling prices, and that effect is going to go away, which is why we expect less consumer spending next year. But you're right, wage growth, a more robust pickup in wage growth certainly would add confidence to our outlook.
Less consumer spending, but are you good on the consumer or not so good on the consumer?
We're good. We're looking for moderate growth, just not 3% that we saw in the last 2 quarters, and not the 3% and above that we saw in the last expansion that was really aided by a big expansion in credit, a booming housing market. I mean, we're just not seeing those trends right now.
So my main question is that every first quarter of the year tends to be really slow and disappoints on the GDP side. What are you guys seeing, especially in a slow global growth environment where we're seeing sub 2%, right? But going back to what you're saying, I mean, we are a services economy, and those PMI numbers are great. So can you talk about the first quarter and what's going to happen, because that'll play into the markets for us.
I think we're going to see something really different this year, actually. I think we're going to see a really weak Q4. In fact, we seem to have a little bit of an inventory overhang right now.
But then a bump in
And then we could see
Q1.
a better performance in Q1, because you know what? We're not seeing this crazy disruptive weather that really, well, in some areas of the country, but broadly speaking, the last 2 winters have been massively disruptive to economic
Unless
growth.
it continues what we're seeing in the Midwest. Laura, thank you so much.
Sure,
Laura
thank you
Rosner,
very
Happy
much.
New Year.
Happy New Year to you.
And